Good morning, traders. It is 8:03 a.m. Chicago time on the 22nd of September, 2022. Thanks for joining me on episode number 2320 this morning. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's look at what we've got today. Today, the day after FOMC, historically is it's like a bear that went down to the stream during the salmon spawning season and ate their fill for the winter. Today is a big old digestion day. It is very, very difficult given the posture and where we are currently across the board. The S&P, the Nasdaq, the Dow, the Russell. Very hard to tell what it might do today. The overall, and I'm stating the obvious. I recognize this. Overall, the market is not able to keep a bid. The Fed yesterday was interesting because we got our 75 basis points. Very, very as expected. I wouldn't have put 100 basis points out of reach. But we got 75 basis points, and then the market just blasts downwards, right? And then Mr. Powell comes on and is quite dovish, right? He says things like, we're seeing softening in the employment market. We're seeing encouraging this or that. Very, very dovish. The market turns around and rips through the SOC, which was around 39.01, something like that, goes to 39.20. And then he tells us the bad news again. So yesterday is, hopefully there are no kids around the room right now where you're listening. Yesterday was a bit of a shit sandwich of the Fed. We got the news out of the way. Then we got a bunch of, we got the news, and then we got a bunch of stuff in the middle, and then we got some dovish remarks, and then we got some quite hawkish remarks. Things like the Fed's increasing the ceiling to 4.6%. The Fed is still going to remain aggressive about increasing interest rates pending more data, and so on and so forth. So yesterday was a whipsaw day. If you lost money yesterday, it was very, very difficult to trade. I've traded a lot of FOMC announcements. I've traded a lot of unemployment reports and just a lot. I've been trading for 22 years. There's just a lot that I've traded, and I tell you, yesterday was just incredibly thin. It was easy to get a trade, have it go. I think I had a couple trades where it just get in, no heat, boom, goes, and then it's hitting my stop. So I lost money trading yesterday. I was actually down by the end of the day. My equity curve looked like a sine wave. So I don't think that I had very much clarity. I saw a lot of structure. I traded the structure, but the stops had to be extremely wide, and there was a lot of aggression, and there's very little liquidity. So it was very, very difficult to trade yesterday, in my opinion. And I don't often say that in terms of an announcement, but the volatility, and I like volatility, the volatility was just too much. So that's where that is. Yesterday after the close, I think we had Lennar Homes and we had someone else who's a home builder. And they both came out and basically indicated that their financials are okay, much, much better than they were in 2008, 2009. So these very, very large home builders are in good shape. However, they're saying that they're seeing fewer visits. The housing market is softening. And I want to remind you that the housing market is by far the largest asset globally. It's some gajillion dollars worth of valuations. That's a huge segment of the market. Today, after the market, we get, this morning we got Accenture. Accenture came in at $2.60 versus $2.57. Accenture came in also at 15.424 billion for Q4. This is their Q4. And so they basically met the expectations after the close. We're looking for Costco. Costco is huge, $72 billion expected and $4.16. It's a big mover for retail. And then FedEx, if you recall FedEx, let me show you FedEx here for a minute. There's FedEx. Okay. So FedEx last week announced that it's seeing a lot of softening and some real issues, and their stock gap down huge, $50 basically, just down 25% on enormous volume. FedEx reports after the close today. Pay attention to that release. FedEx is like, what do you call those cells that carry nutrients and stuff in the blood? I forget, but not T cells. That's for defense. But FedEx, for the economy, FedEx is the blood of the economy. I mean, if you don't, logistics, if you can't get products across the economy, and if you don't have good enough infrastructure for that, you don't really have a sustainable economy. So FedEx is very, very much an important indication of how products are moving across the globe and across the country. Hemoglobin, thank you. So FedEx is going to be important after the close. Today, I imagine that the transports will be quite busy today. The overall risk posture, we are really mixed. The market the S&P has dropped from the 3804 low yesterday all the way down 3766. It dropped about 40 points below the low overnight. Then it went all the way up to the FOMC low. And I talked about this yesterday. I don't normally talk about this stuff in public, but I talked about this and I told the folks in convergent trading that we need to mark the high and the low of the FOMC swing. Treat it like I called it an IB, but an IB is fixed in time. It's really an opening swing. And for FedEx, that opening swing was at 38.3275, I think. 38.3275. Correct me if I'm wrong. But that's the low swing of the FOMC announcement. That happened about 7 minutes after the announcement. I think the high was 39.04, 39.05. I think 39.04. The announcement came out at 01, 39.01. It went to 04, and it dropped within 7 minutes. It was at 38.33. So it dropped about 70 points. 70 points. So the OS for FOMC is 39.04-ish. Don't remember the exact number, but ballpark, pretty close to 38.3275 is the number that sticks with me because there was a trade at 38.3275 short yesterday that worked really well. And look at where we are in the overnight session, 38.33. 38.33. That's the high of the overnight session. So keeping an eye on that level this morning. And of course, keeping an eye on where we are relative to settlement. We settled at the low of the session. We closed and settled at the low of the session yesterday. Settlement for the ES at 38.06 quarter. The low is 38.04. The closing print at the 4 o'clock equity close, 3 o'clock central, was at the low. I see it on the market profile that the last print was 38.04. So right at the low. This is very, very bearish. We did take out the high, the IB high. So what we had yesterday was a neutral extreme down close. Look, I'm jumping around a little bit. Let me go over the what's coming for today on the calendar. There's just a lot to cover, and I'm kind of all over the place. This morning, the Bank of England announced its interest rates. The expectation was a rise of 50 basis points. That's what we got. They're at 2.25%. We got initial claims this morning at 213,000 versus 215 expected, so it's slightly better. Current account, the current account for Q2, the entire quarter, was expected at negative 260 billion. So $260 billion deficit in the current account came in at 251 billion. So that's better. We do get EU consumer confidence this morning, flash at 10 o'clock, expecting a negative 29. And then a couple numbers out of Australia, and then a key number, which is a GfK consumer confidence for September out of Great Britain at 7:01 p.m. Eastern time, expecting negative 35. That's what's on deck for this morning. Let's now go back to the S&P again. The S&P multi-distribution profile this morning, the point of control at 3808.75. Really high range. Look at that range, 66.25 points, which is higher than one standard deviation of the overnight range, which is at the bottom of your screen, right on top of me. Right over there. 53 is the limit of that one standard deviation. We're beyond it. So now we're in two standard deviations, inside of the range of two standard deviations. For range, which tells us that this is an unusually wide day, so immediately we know to expect that there's likely to be pretty good range to for the session. The overnight inventories, even there's just as much volume above the settlement price as there is below. Actually, I think it's the close. The volume is very high at 411,000. One standard deviation of volume, or what we consider normal, the limit of that's 330,000. So we've gone back into July. We took out the gap. We've now moved back to the point that now I am going to show you this classic chart right here. My composite chart on IRT, which IRT does a great job with IQ Feed in equalizing prices and giving us the real story behind what's going on in terms of the price structure. So if we look at the action from the prior high swing, we see that we're looking at the wrong product. First of all, I came in this morning and a lot of my symbols had changed. The computer restarted on its own. I hate that. I had to go back and force it to not do that. But we see that we've gone from balance. We've been in balance over here. We moved from upper balance, right, the 41.58 key area, to this middle balance. We've been stuck at this middle balance since CPI, and then now we're breaking out of this balance right here. We're breaking away, okay, and it brings us back to where we were in July. The point of control in this area is 37.93.25, which we saw overnight, but that's where we're trading right now, 38.02. We're in the range of this composite volume point of control, microcomposite volume point of control. So what we've done is we've pushed up, put in a lower high swing, and have come off. And between the CPI data and now the FOMC, we really don't have a lot of strength here. The expectation is it's likely to work through and get down into the 37.50, 42, and then potentially test this Big swing low at 36.57, adjusted, back adjusted. If my prices are different than yours, is because my prices are all back adjusted, going back 20 years. They're back adjusted, so there's no gap on rollover. So these prices are correct, and they're in correlation with the SPX, which is what this index represents. So this is where we stand. So what does that mean for today? When we look at the overnight session and what we saw yesterday, look at this. We pushed all the way up to 39.24-ish or so yesterday, and we made this really strong push down, really big flush down, and this is where this is that setup I talked about. Okay, the 38.32. This is the original low from the Fed. Okay, original low from the Fed, and that's our setup right there, 38.32. And in the overnight high, tested this. So it tested basically a double bottom. You can see there's quite a bit of volume. I don't know. Do you guys see this blue dot? Might not be apparent, although I'm transmitting in 1080p high definition, but you may not be able to see this due to compression, the live stream compression or something. But you could see there was a big fight there at that low, and that is the trigger. That is the trigger for stalking a trade. It tells me that, hey, there was a fight there. So if it breaks through, I expect that area to be defended. I didn't expect this area to be defended here because there wasn't much volume. There was some pretty good volume on the way up, though. There's some pretty good lifting after we put in that 38.32, and then we came down to 38.32. And I'll talk about this in today's webinar, public webinar, which is pinned to your live chat about scalping, which takes place at 1 o'clock today. So I want to remind you of that. But we broke through, and there's the pullback right there. And then from there, boom, and it starts to sell off. And then since then, we've put in a bottom at 37.66.75, and we've come all the way back to the 38.32.75. Took it out by a tick, and now we are back in the day generated levels, which is the full session VWAP, full session mid. Day generated levels are like the IB, full session VWAP, full session mid, opening swing, the open, things like that. And so what we see here is pretty good lifting, but if there wasn't a lid or some sort of an iceberg or some size there, you wouldn't see those blueprints because there's nothing to lift. There's nothing there. So this 38.20 is now representing short-term resistance. So on the open, I'm watching what it does here at 38.20. If it goes there, I'm watching what it does here on this clear price action swing at 37.92 or so. This area right here, 92, 93. I'm going to use that as a gauge for which side takes control early on. So I'm watching for, again, 37.93 to 38.20 is the bracket, is the box that I'm going to be watching at the open. Whichever side breaks, I'm going to look for pullbacks, trade from that direction. We could just as easily get back to 38.50 here and settle in this and fight this area here. Although I doubt the market is able to, at the level that we're at in terms of interest rates, it's going to be very hard for it to get back to, say, 4,000 at the moment. There has to be an indication that inflation is slowing down for that to happen. For the market to price in a future where interest rates get lower, investors are not going to stick their neck out at this point. So yesterday, let's take a look at a different chart. Yesterday was an impulse day down. Was another impulse day down. Wide range. Okay. We barely got to 1 vol sigma yesterday, so not very aggressive, but then we opened a higher yesterday as well. So we almost gapped up yesterday, so that really pushed us away from the 1 vol sigma down. But yesterday, from a range perspective, it is an impulsive day. This is considered a pullback here, and I'm expecting this thing to test the low, the yesterday's low at 38.04. I'm expecting it to go offered at some point during the RTH session. Okay, so this is what we're looking at. I'm not going to create scenarios this morning because I don't know. I'm in a state where I have no idea. I don't have a probability of one or the other or whatever. I'm just going to follow the price map. And just like I told you, 93, think about it, 93, 20, and then we move into this section right here. And that area, you see the stock zone there at 40. And then we're back at the prior week's low at 53. These are the key areas that I'm looking for reactions at. These are the key prices that I'm expecting the market to respond to. Otherwise, if it gives up to 93, and this does not look like a 9 at all, if it gives up to 93, then we're looking for the market to test that low, give us the opening swing, give us our overnight stat by taking out this, what did I say? It was 67 or so, 67, and then 50 mid-century figure below that. So these are the key areas. So it's important today to just try not to be so FOMO intense. You know, put down your FOMO. Let the market move to an area that you believe gives you an advantage. And I'm drawing a price map for what those areas are. Everything in between the 20 and the 93 is noise. See how the market responds. Does it go to the level and have a hard time and roll? So then you're looking for a bounce up to short for a continuation. Or does it break the level and have a hard time pulling back? See, it breaks the 20 and it's really struggling to stay below 20. Then you're looking for a long to 40. That's I believe to be the intelligent way to trade. It's just basically keeping in mind the bigger picture. And so it's really important today to maintain a grasp on a chart that is higher time frame. I would not use order flow to try to decide on what bias or what levels to trade. I think that's a crazy thing to do. We'll talk about that in the scalping webinar today, which, by the way, here it is, the information on the scalping webinar. It is also pinned to your live chat. You can register by pointing your browser to go to ct.pro/scalping-public-webinar, or for you Brits, scalping-public-webinar. Be sure to join and we'll talk about this. Okay, so that's what I'll leave you with today. Oh, one more thing. I wanted to show you in my composite chart here. Take a look at how once we broke CPI, look at what we've done. So what we have here is balance that was that we broke away from yesterday, 38.43. We had balance that we broke away from. So what we do in that situation is we merge these profiles. That's how we get our micro composite. And yesterday's profile, by the way, very odd profile. The point of control was so heavy up top, and all that action that took place afterwards did not move value at all, did not move the most valuable price. So there is very much a stretched band element to yesterday's profile. I could talk about this for an hour. I don't have the time, but just be aware that we didn't move value down. The market isn't accepting these prices as of yesterday. So when I merge this to the left, you'll see what the true picture is. What this is from that Fed low at 32.75 downwards, we have a bit of an excess, basically single prints down. This could very easily snap back, and the composite price there is 75. So you can see that there's a fairly accepted and balanced, and that's because after CPI, all we did is balance for several days. And so there's a fair amount of resistance above, but the most valuable price down here is 75. So there's a lot there. If it starts to turn up, there's a lot of distance there. Remember, 20 and so on. 20, the overnight high, 32.75, 40, 50, 75 is what we've got above us. Okay. Good luck today, and I'll catch you in a webinar. Be sure to register as soon as possible. And if you are not able to attend, register so you can get the recording. Take care.